Let us take up the mock test paper series 1, March 25 question paper. Okay, on advanced auditing and professional ethics. Let us take up the first MCQ. Mukund Hospital is a multi-speciality hospital which has been facing a lot of pilferage and troubles regarding their inventory maintenance and control. On investigation into the matter, it was found that the person in charge of inventory inflow and outflow from the storehouse is also responsible for the purchases and maintaining of inventory records. Which basic system of control has been violated? It means that the person who is in charge of inflow of inventory, outflow of inventory from the storehouse, and the person who is making purchases, maintaining records is one person. Means it clearly shows that there is there's no segregation of duty. That's the thing actually here. Okay, so here you're assigning purchases, inventory maintenance, inflow, outflow to one person, and definitely it's a breach of segregation of duty, and which is a key aspect of internal control. Now, you can't choose A, which is a proper authorization of transaction. So this is definitely it's not relevant at all. And physical control over the assets basically talks about the safeguard of assets. And independent internal verification also, it speaks about the verification after the transaction has occurred. So basically here segregation of duty is a right answer. B is the right answer. Next one. KNC Bank was having 20 branches all over India by the year ending 31st March 2024. At the Mumbai branch of bank, there were high value cash deposits in one of the current accounts in June 23. Your firm has been appointed as a concurrent auditor at Mumbai branch. The cash collected by the branch was remitted to the currency chest on the very same day. But during the concurrent audit in April 23 itself, the auditor noticed that the branch was unable to show intimation sent via email to the currency chest for the cash remittance. How the discrepancy of not preserving the intimations of cash remittance to the currency chest by Mumbai branch of the bank should be dealt by the concurrent auditor in his report. So, in his report, how he should deal with the same actually here. In his report, select the correct option in the following. So, what are the correct options? Let us look into the correct option. First of all, the auditor should report the matter as a major irregularity in the audit report to the management. Now, this is definitely is a very close answer. Actually, A stands to be a close answer. That's the thing here. So, first you should escalate to the matter to the major irregularity in his audit report to the management. Second one, auditor should discuss the importance of preserving the hard and the soft copy of emails sent for the cash remittance with the branch manager and check for its compliance in the next audit period. So he has to discuss the importance of preserving the hard and soft copy of emails sent for the cash remittance with the branch manager. So now in this case, definitely B is a strong option. Both A and B both are a relevant option. Auditors should verify details from email sent to currency chest and close the matter. Now, this will not address the compliance issue or documentation. C cannot be the option. And as it is not a minor irregularity, the auditor can ignore the same. It's a minor irregularity, so you can ignore the same. This is definitely not a minor irregularity. It's a recurring compliance matter in the bank. So C and D are completely ruled out. Between A and B, since he is a concurrent auditor, so B is the most appropriate answer, followed by A. So B, you have to choose B. A and B will always create a confusion, but B is more appropriate answer in this regard. Okay, that's the thing here. So you have to check whether the compliance is happening or not as a part of the concurrent audit process. Next one, MLP, a company, a chartered accountant firm, which was appointed to conduct the statutory audit of financial year 23-24 for the company RST Limited. CA Kushal was the engagement partner for the said assignment. During the ongoing engagement of the audit at the end of the period, a period that is third quarter, two limited reviews were issued by MLP and Company. Before issuance of third quarter limited review, the management of the company imposed a limitation on the scope of the audit that CA Kushal considered likely to result a need to express a qualified opinion or a disclaimer of an opinion on the financial statement, and accordingly he requested the management to remove such limitations. However, the management refused to remove the said limitation. That's the thing here. What was the responsibility of MLP and Company with respect to the issue of limited review report at the time of the resignation? At the time of the resignation, that's the thing here. So, with respect to the limited review report at the time of resignation, that's the thing here. Limited review report for the third quarter was required to be issued. So, what is the see limited review report? So here, what has happened? They have imposed a limitation. Okay. So now what they are highlighting is that so whether he is required to uh, re- give a report actually, that is what it is trying to highlight actually. Okay. So now in this case, first option A, what it says, the limited review report for third quarter is required to be issued. That is all it is. Limited review report for third quarter is required to be issued, and consequently after its issue, audit report for the full year is also required to be issued. Then the next option, no further limited review report is required to be issued as it was already issued in the second quarter at the time of resignation. A limited review report for third quarter was required to be issued subject to the terms of the audit engagement. That's the thing here. Now, in this case, what is happening is that there is a limitation imposed. There is a limitation imposed by the management. That's the thing. So, management has put the limitations. It's a company, and what has happened actually here, the management has imposed a limitation. So Kushal considered likely to result express a qualified opinion, disclaim opinion, and request the management to remove the limitation. He refused to remove the limitation. Now, in this case, the options given are first of all whether we have to issue a limited review report. So in this case, definitely limited review report for third quarter has to be issued. But should I go by A or B, or it should be gone as per the D? Because here they say that you don't have to issue a limited review. That is not an acceptable option. So C is completely ruled out. Now you have to choose between A, B, and D. A says you just issue limited review report for third quarter. B says that limited review report you issued for third quarter plus you issue an audit report for the full year also you issue. Okay. And what does D says that limited review report for the third quarter is to be issued subject to the terms of the audit engagement. Okay. Now, in this case, what has happened here actually? So this scope, there's a scope limitation, and since there's a scope limitation, this is can what you can say result in the auditor resigning. If he cannot resign, if the auditor cannot resign, then he has to give a modified opinion, a modified or a disclaimer, such kind of thing. So again, so in this case, actually here what happens, since it's a listed company requirement is that as per the SEBI, what happens is that so you have to once you issue the third quarter, then you have to issue the audit report. Also will be required to be issued. So once the three quarters has to be issued, then what happens? This the fourth quarter, that is fourth quarter report and the entire annual report to be issued. So B will be the more appropriate answer. Okay, fine.